Hello, everyone, and welcome to INSEAD's webinar. So the title of the webinar today is Impact Investing in Time of Crisis. It's being hosted by the Global Private Equity Initiative, which is INSEAD's private equity and venture capital think tank. My name is Jasjit Singh. And I'm a professor of strategy and a professor of sustainable development here at INSEAD. I teach in the MBA program, and I also teach some executive programs like in the INSEAD Social Entrepreneurship Program. And I'll be the host today and the moderator. Just a few words about the topic for today before I introduce the speaker. So the context, of course, of the conversation is investing for impact. You know, traditionally, we'd seen the world of philanthropy and the world of investing as two very different worlds, but increasingly we are seeing investors interested in also looking at societal issues. And now in the context of COVID, these conversations have become even more important. And these are a couple of articles I recently saw. BlackRock saying we are going to unveil a new impact fund with SDG focus, where COVID is a very explicit agenda item in there as well. And there are some articles specifically about investing in companies that are helping make progress, for example, on vaccines or testing and other things in this pandemic. Let me take a couple of very specific examples of companies that I would say in many ways are doing exceptionally well in this duration, because normally we expect when there's a pandemic, there's a crisis, many businesses don't do well. And certainly that's true, that's happening. For example, many of the organizations that are in the financial inclusion space, and they, you know, in rural areas, they are required to go meet customers and so on. And now when there's a lockdown, their business is going to suffer. But I'm going to give you two examples of companies that are doing well. One comes from my conversations with Credit Suisse, their impact investing division. They've invested in this organization called Ruang Guru in Indonesia, which is an ed tech company which connects children, school-going children with tutors for online lessons. And recently they made their lessons available for free during the school shutdown. And they were pleasantly surprised to find actually that their demand went so far up that the downloads for their app were actually more than that, even for TikTok and for WhatsApp. And they continue to do exceedingly well in this pandemic. One more example, next slide, please. Another example is a telemedicine organization called Sehat Kahani, and I was having a conversation with one of the co-founders, Dr. Sara Saeed, in Pakistan yesterday, and she was telling how the role of the organization actually has become even more critical during the pandemic, especially with the lockdowns, where traditionally they used to have these clinics where they would connect patients in remote areas with doctors who, in their case, was actually a network of stay-at-home women who had otherwise dropped out of the workforce, but they were doctors, they were qualified doctors, so they bring them back in the workforce. But recently, they've launched another way of connecting them, which is through an app, and their app has recently taken off in a big way because of the pandemic, and they've collaborated with the government in Pakistan to make it widely available for free, actually, for the next 3 months. So this is another example of an organization that's contributing immensely. It's running as a business, so it's not running as a charity. Both of these, importantly, are examples of organizations which are running as business with a long-term perspective, and they're depending on that business growth while having impact at the same time. So to me, these are two illustrations of the kind of organizations that our speaker will be talking about. Okay, so can I introduce the speaker for today, please? So it's a pleasure to introduce Mr. Mark Florman from Time Partners as one of our as our speaker today. Sorry, Mark is a CEO of Time Partners and a specialist, which is a specialist in private equity and venture capital, including impact investing. They provide customized advice for constructing portfolios for global families interested in investing, very often with an impact lens as well, while of course seeking to make returns. He's played a crucial role in the impact investing sector. He's collaborated with leading organizations like London School of Economics in helping build the ecosystem, advise organizations like BBC on strategy and reporting, and he also is a chair of the world's largest wind blade manufacturer, and he also engages in impact investing through his own family office. So Mark, it's a real pleasure to have you here. Welcome, the floor is yours. Thank you.
Oh, thank you, Jasjit. Thank you. And very nice to be with everyone this morning or this evening if you're in the Far East. Thanks for that very kind introduction, Jasjit, very generous. So I just have 8 or 9 slides and I'll go through them one by one, and then we're going to have about 20 minutes for questions, I hope. So if we could move on to the first slide. And this is a very simple definition of impact investing. And you can see here, this is a very complex and controversial issue. And people have been battling with this definition since, well, thousands of years in effect. But you'll see a point that I make here just in number 3, that we argue that only change which is consequential to the targeted effort of the investor truly counts. Loosely consequential does not count at the same weighting. And I think this is almost the heart of today's issue. And we'll be coming back to this a number of times over the next 10 minutes. So if we could go on to the second slide, please. So I've tried to encapsulate here a very brief history of impact investing. I could have gone back to the birth of Christ, practically, because what we're talking about is a way of thinking, a way of life. But I set out here a few ideas. You see the growth of the socially responsible causes in the 18th, 19th, and 20th centuries. And of course, the growth over the past 30 years of sustainable investing. And this was led very much in the growth markets, the emerging markets, by the World Bank and other investors. And I think sometimes that those in the Western world had to play catch up to what we had achieved in Africa and elsewhere. And to the right, I show you where I think we are today, which is why the complete external impact and the external activity of a business, whether it's being invested in or not, should be measured from both a social and environmental point of view. And we need to track this type of behavior quite regularly, at least seeking an annual report. I want to give you a couple of examples on this page right away. The first one is Tumi. Tumi is a luggage. You might know I was part of the Doughty Hanson team and we successfully invested in Tumi about 15 years ago and built the company to be completely sustainable. Supply chain, workforces, CO2 emissions, and so on. It was a very successful investment, and we thought towards the end we had built a truly sustainable business. And we exited at a very successful price, which proved that the building of resilience into a company does work. Another example, a company I chaired a while back actually, LM Glass Fiber, we noticed in our supply chains to Ecuador that balsa wood farmers were in trouble. We need balsa wood in wind blades, otherwise we don't get competitive wind energy. We helped develop the balsa wood farming networks in Ecuador to ensure our supply chain was strong and that they were properly looked after. A few years ago, when 8 Miles was developed in Africa with the support of the World Bank, CDC, and others, this private equity group wanted to show that life in impact investing is beyond not doing damage. Life is about doing positive things. So we actually took on a bit of a battle with the World Bank and asked them to consider the total rate of return, not just preventing us from doing negative things, but to embrace and to value the positive things we were doing, in particular job creation. We multiply sometimes in weaker economies, jobs created by a multiple of 6 or 7. So we demonstrated a positive impact, and that's how we led ourselves to begin work on the external rate of return with the London School of Economics. So if we move over to the next slide, number 3. And today I feel that we have reached a point where number 2 there on your screen, sustainable businesses, is the absolute minimum of where we should be. This is where the whole world should be today. Putting in place fair play, strong standards of governance, decent behavior all the way through the supply chain, looking after your workers properly and paying people in a fair sense. And this, I believe, is the same thing as focusing on long-term value creation. On the right, we have 2 broad definitions, and here this gets very controversial, and I know many of you at this moment will be examining number 3 and thinking, do I agree with this? Do I not agree with this? And this is the great academic debate. This is what we're so excited about. So firstly, profit with soft purpose. It is where there is no mission lock. There's no absolute mission lock, which means if you sold a company like that, the new owners could change the mission completely. But if you have a profit with a harder purpose and you're more intentional and you're more driven to perform a particular social outcome, you might even consider locking in a social mission into your articles of association. And this is the great debate across the world. And our old friend Ronnie Cohen, the true father of this industry, has always been very certain, but disagree with me, Ronnie, or wave if you feel I'm wrong here. But locking in a mission and hard purpose, profit with purpose, is the ultimate impact investing. I'm not saying everyone should go there at all. And at the bottom, we show there, is there any concession at all to a financial return? Do we sacrifice a financial return? Well, broadly, the further you go to the right along that page, possibly. And that's not necessarily a bad thing. So if we have a look at the next page, I'm now going to come after that general introduction to where are we today? Well, across the world, economies have sadly been completely flattened, or as I put it in a letter to our Prime Minister here in Britain yesterday, we have effectively machine-gunned the mid-market of the UK corporate sector. Everyone is at home, everyone is very frightened. They're frightened about their health and their relations, but they're equally frightened now about the state of their companies and their economies and their jobs. And I believe what we're doing is that we're ushering in a new era of mutual responsibility. And it is back. It came back, I think, 20 or 30 years ago, and with some great initiatives, which we'll come back to in a moment, it has always been here. But I think this global crisis means that it's going to be easier to rebuild, and we'll be able to rebuild in a more sustainable way if we work in cooperation with each other. And each other, I mean cooperation between business, workers, community generally, the state, and the planet. Sustainable businesses will generate more resilient profits. And I'm going to come back to this on my last slide. I'm a true believer in the positive correlation between good behavior and better outcomes and better value creation. These things are coming together. And I think businesses with strong social contracts will prosper. They will be determined by consumers and by those who want to work with you to be stronger and more sustainable businesses to get a job with and to build a career with. And someone asked me the other day, what is a strong social contract? A strong social contract is your conscience. It's how you feel about your business and whether you feel good about the way in which you are behaving. And I'll just flip up at the top there, you see a new era of mutual responsibility. And I spoke earlier about consequence, unintended and intended. Well, the virus is an unintended consequence of poor business practices. So I think as we move through life and we go even to the bottom of this page, we need to measure our impacts, intended and unintended. So we need to be quite conscious of what we're trying to achieve and also our general behavior. And we need to weight our impacts by the importance of the value. We need to bring in, if possible, a multiplier. In our work on the external rate of return with the LSE, we feel it's really important to multiply your impact, either by one. For example, if you're creating a job in Mayfair, in London today, the value of that job is one. If that same job is created in East Glasgow or Kampala, you can probably multiply it by between 4 and 7. And I'll come back to that later. Maybe if we move on to the next slide. So I have a few thoughts here. The first is it possible now to move towards the building of purpose-driven companies? Can we actually take into account a triple bottom line? People, planet, and profit, all thought about more or less at the same time. This is actually not visionary. This is actually how it used to be 200 years ago, but we got off track. If we can build sustainability and the circular economy at the heart of our companies and our economies, we think that you will build companies that will attract more talent and more customers. And that correlation I'm going to return to. My second point here is we need to start rebuilding our economies. And here in the UK, we have a continuous battle, which I hope will now come to an end, between the private sector and the public sector. And I like to remind people that 85% of jobs in the UK are in the private sector, and we also generate 100% of our tax, which is often missing on our politicians. All respect to politicians who are watching. And what we're arguing for is a new partnership between business, society, and state. And with that in mind, I wrote yesterday, as I mentioned earlier, to our government, outlining a suggested plan on how to rebuild economies. And you can see that there's something just launched called the Centre for Economic Recovery that Time Partners has helped create. We do a lot of outreach work at Time Partners. So it's centreforeconomicrecovery.org.uk. And there we have published yesterday a 12-point plan for the recovery of Western economies. And you'll see it is littered with partnership and impact thinking. Finally, I would say, please, could the world begin to think long term? As many of you know, and I might have bored you through some of my speeches, but I've been making for many years a speech about where we will be in 30 years from now. And we comment on aging populations, the contracting human pyramid, the population probably capping at 11 billion, the terrible crisis in climate, the rise of nationalism, and the desperate need for new skills. Many of these things must now be embedded in our new economic thinking. If we could go on to number 6. So I'm going to return to impact measurement. And I believe this is not an academic philosophy. This is not really for academia. This is for life generally. This is what we should all be doing. And I wanted to become a new normal by 2025. And one thing that we can do is look at our articles of association. If you see that 99.9% of all articles globally protect the board from doing the very best it can for shareholders. Well, there is another type of article, a number of us wrote this in the UK some years ago, which allows the articles to be changed so you can protect your stakeholders as well. And we're now proposing purpose-driven companies in Britain so that the original articles can be formed with that in mind. The government have resisted this because they think surely you'll end up with good companies and bad companies. And the bad companies are the ones that don't have these broader articles. But we've put forward legislation. And I think this type of thinking would have prevented the sort of crises that we're going through. I want to explain briefly the external rate of return. It looks here on your picture a bit like something which you're trying to hit, but see it in a different way. Imagine a pond, and into this pond you throw a rock. And Robin, my co-creator of the ERR, who I hope is watching, if you're there, Robin, hi. We created this about 5 or 6 years ago. You throw the rock into the middle, and this is your intense effort to try and build the company that you're investing in. Jobs, skills, systems, everything that you're contributing, positive and negative, to that company. But think for a moment that this investment also has an implication, deep implication, for your suppliers. How are you treating the people who make things for you, your supply chain, your pricing, your payment mechanisms? These things should possibly be measured. And then the next ring out, your customers. Are you bringing new and innovative services to your customers? A great example here are my friends at Leapfrog. They have brought new financial services and healthcare ideas to people who need them. And finally, country. What are you contributing to the country? Tax generated, and ultimately the environment, positive or negative. These things should be tracked both from positives and negatives. On slide 7, on the next slide, and we'll be finished in a moment. So if we move on to the next slide, you'll see a positive correlation. And I believe that in years to come, there's going to be this correlation between good behavior and more capital. So a sustainable business, which is meeting certain purposes, soft or hard, will attract good people and more customers, and capital will follow. And so it's a circular. And finally, if we look at the final online, page number 8, so here's how we measure impact and how we see the impact investing industry. The IRR is a return on dollars, and the ERR is the return to society. And the ultimate goal, which I know you will all be thinking about, is how does one perfectly measure external impact? And I'll put that back to you. Thank you very much. And if we just look at the very last page, I'm very open. Thank you all for questions and to support. I'm going to pass back now to Jasjit. Thank you very much, Jasjit.
Mark, thank you very much for that very inspirational talk. And obviously, we could talk about this for hours, given your wisdom. There have been multiple questions asking about what resources or write-ups you have available, and certainly I think people can look up on your website that you flashed on the previous slide. And if you don't mind going to the previous slide just for 10 more seconds so that people can take down the website name, because many people were interested. And Mark has a great blog with a lot of information about the frameworks that he's also suggested, but also his commentary on the overall ecosystem, which I think many people will find useful. Just to remind us, the recording will be available later for people, so you can come back and review some of his points. So Mark, let's take a few questions just to dig deeper on some of the points that you'd mentioned. Some of these questions come from the live feed that's coming in, and some from what people had registered. And just so that everybody knows who are participating, because we want to make sure we cover at least a few of the questions, we will surely be running a few minutes late. So of course, if anybody has to leave in time in 30 minutes, we totally understand. But if you can stay back, it would be great. So one of the questions that came up, Mark, was, and it's coming up in different forms, is exactly how would you measure impact to a point where you really can be as precise about measuring rate of return the way we are used to thinking on the financial side of things, because that really seems critical in making progress beyond just stories about impact.
But that is the ultimate goal. That's everyone's goal. There are 150 different answers to that, because there are 150 or more impact metric measurements globally, and one day we'll find one. And the ultimate goal is to convert $1 into an impact unit, and to actually have a currency. I personally believe it's incredibly difficult, but in the interim, what we should be doing is telling stories and seeking openness, and asking every company to be very explicit about the change that it's affecting and the difference that it's making, positive and negative. And I'm going to keep all the answers very, very quick, Jasjit.
Sure.
There
Yeah.
are a lot of
It's
questions.
a longer discussion, yes. Okay, so another, in combining two questions here, you mentioned the importance of long-term. So there are two related questions. One is, how do we really get to long-term thinking in the current system? How do we practically make progress? And the second question, connecting that to the pandemic, was, do we really even want to go long-term when there are such short-term, issues right now that we need to first deal with because of the pandemic, right? So how do we think long-term, and how do we balance the short-term pressures of recovering from the pandemic from long-term goals that we have?
Well, I think we must always do both. But again, there are probably plenty of those in politics watching, and I don't mean to upset anyone, but politicians generally are short-term thinkers, and there's not much room for long-term thinking. So we need to increase substantially long-term planning. If you look at today's papers on pandemic preparation, there are a number of countries in the Far East who've been extremely strong and resilient, and they've built all the systems into their economies. And those, particularly the UK and the US, have been extremely poor at this. So we actually fail continuously in long-term planning. And you could look at social care, all sorts of industries and issues across the Western world in particular, where we have not built in preparations as we should have done. For example, if you look at the letter that I've written to Boris Johnson yesterday, I asked for a sovereign wealth fund in Britain. And we could all ask ourselves, how is it possible that we don't have a sovereign wealth fund? It's extraordinary. This is actually key to strong national planning. We supported Nigeria in the creation of their sovereign wealth fund, and we suggested that a third of the trustees of the wealth fund were under the age of 35 to make them invest for the long term. So there's so many things that nations could do to build resilience and cooperation.
Interesting. So pushing that further a little bit on the specifics then, there are two related questions in terms of, if you were an impact investor today, thinking, how do I make the biggest possible difference? How do I think in terms of different sectors? Would you consider some sectors more important than others? And a related question is, how do you think of allocation in developing markets versus the developed world?
Well, I would start with the SDGs. I think the SDG framework is really good. We've been working with some friends in Europe recently on a new interpretation of the SDGs. We actually took all 17 and put them in a different order. We had those that are cause and effect. So those that truly drive change and those that are consequential to change. So I'd start with the SDGs, and then I'd speak to your investors or those who you represent in terms of pension funds and others, and ask yourselves, what SDG do you particularly want to focus on? And then from there, build an investment framework to address those. As I think you all know, we are heavily embedded in the private equity industry globally. So we tend to move towards places where we can seek control. So private equity funds in both the emerged economies and emerging economies use the SDGs as a guideline, but then seek out absolutely the best managers and diligence them well, think them through, and make sure you know whether they understand impact investing as well. Impact is often an additionality to their core business, so the diligence around that has to be really good.
Mark, thank you for that response. Another question on the impact side, and this is Maria typing in the live poll. How relevant do you think it is to take the beneficiary's voice into account when measuring impact? And I guess the spirit of that question is, I'm reminded of Oxfam report last year saying impact investing sector sometimes risks becoming like the finance people congratulating finance people on how great they are for the world. And the focus comes first on financial returns, and sometimes we conveniently defining impact in a way that it doesn't reach the trade-offs, while if you think from beneficiaries' point of view, sometimes the trade-offs are real. So what's your view on all of that?
Well, the beneficiary must be taken into account. I mean, impact investing is a new term. It's a term that was developed about 20 years ago. But I think everyone watching this was probably involved in impact investing many years before that. What we actually do in impact investing has been around for 100 years or more. It is the origins of good business practice. So we take good business practice, a high degree of responsibility for driving growth and change within a company, but changing it with decency and integrity, and then working to explain yourself. So the explanation of what you're doing and the openness is important. So for example, with the BBC, they, £4 billion corporation with 5 public purposes. And when I joined their board, I said to them, where's your purpose report? And they said, all respect to BBC people watching, if there's anyone, they said, but what do you mean a purpose report? And I said, well, you have 5 purposes. Why don't you write about how you meet them? One of them is education. So now if you look at the BBC annual report, they're littered with very great examples of how they've educated and taught and helped businesses thrive. They actually help start around 2,000 companies a year, the BBC, but nobody knows that. So impact investing is also about the integrity of your reporting and the detail with which you give back to your investors. And there you must know the beneficiaries and you must take into account the way they feel. If you look at the external rate of return report, Robin and I invite people to comment. So the ERR report is actually an open, it's a bit like the Uber of impact investing. I think we might have come up with it before Uber. So as a customer or an employee of a company, you should be able to comment on your experience with that company. And the beneficiary of impact investing must feed back into the impact reports.
Thank you. So one of the questions that Nicholas has been raising, and these are some tough questions. We clearly get a tough audience, exactly what we like out here. So Nicholas is asking a question. There have been many crises in the past, and when we are in the middle of a crisis, very often the business world, finance world is saying, yeah, we are going to completely reform and redefine capitalism. And then the crisis goes away and all of that is conveniently forgotten. How do we make sure that this time will be any different?
Well, that's a perfect question, and that happens every time. And I think this time we need to embrace a new culture if we can. We need this community, all of the 1,000 or 2,000 people watching today and beyond, to actually start a dialogue with politicians and with business leaders that they must explain the full impact of what they do. So that's not impact investing, that's just good behavior. The crisis, as I said earlier, that has enveloped the world at the moment is a result of poor practice. It's a lack of respect for the planet. It's a lack of respect for biodiversity, for climate, and the endless pursuit of growth. And growth is a very good thing, but the endless pursuit of growth, to the exception of everything else, is dangerous. And now we have proof. So I think there will be a new movement. I think you have extraordinary people across the world speaking now for a new style of government. But if you look at the paper that we released yesterday on the Center for Economic Recovery, we've put out 12 points, and it's actually dripping and listed with details on how the corporate world and the financial world should reform. I would say generally that we in the private equity industry have spent 20 years working to build better businesses. I describe the industry as, the investing of savings of pensioners in order to build better businesses, in order to create jobs and opportunity. So in that world, we're very conscious of our role in society and how we must report. We could still do better.
So there's multiple questions on ERR. I'm just going to take perhaps a couple of more questions. I know we are already over time, but since we have you here captive, we are going to make the best use of that. The questions are about the ERR. A lot of people are very impressed with this idea that we are looking at returns not on financial, but also on social side. But how much traction is it practically already getting, and how mature do you think the model already is? Do you consider it work in progress, or do you think you really reached a point where it really is a definitive model that you're ready to tell the world that you should be following?
No, it's a work in progress. There was a team that put it together a few years back, and the LSE were great in helping. And essentially what it is that we take these 5 vectors. We invite companies to report up to 30 different metrics within the 5 vectors and to report regularly. But it actually originated with a wish to record positives. So when we were building 8 Miles, I was making a speech in Mauritius, and there are a lot of African government heads there, and I wanted to explain the beauty and the importance of venture capital. So I was explaining what an IRR is. You know, it could be a good return for your pensioners in pension funds across Africa if you back venture capital across African states. And I then came up with this term, the external rate of return, because it was actually orientated towards the positives: jobs created, skills taught, supply chains built, taxes generated for your country, strong environmental credentials of companies. But everything should be reported positive and negative. And through openness, you can feel the impacts and you can read them. So in fact, you can take a step back and you can think, maybe I don't need the perfect metric. I just need honesty and I need information. The concept has been picked up by private equity firms across the world and interpreted in their own way. So the BBC picked it up and they now have their purpose report. So it's more conceptual. Anyway, we would love help on this. And if the great brains of INSEAD could help, that would be great. And we welcome involvement.
So that's very inspirational, and I think clearly it's as much you're emphasizing the need for entire mindset change and the willingness to make progress, and then it will take time, but we are definitely moving in the right direction. If I may ask one last question, because I'm going to be teaching MBA starting next week a course that's called Strategy and Investing for Impact, and one of the questions that always comes up is, what career advice would you have for an MBA today in this situation? Struggling to, on the one hand, figure out the job market, which is obviously tanking, at the same time saying, hey, is this opportunity to make a career where I really will have a meaningful life? What kind of advice would you offer, just as a last question, to these people that are watching?
I would say, make a movie of your life in your mind. Try and think forward about the areas that you want to be engaged in, and think really deeply about purpose, and then work backwards to see what difference you can make. And you'll probably find you are actually sitting at the very heart of the impact investing industry, because it's much bigger than a simple little definition. It's actually a way of life. It's about decency and behavior, and how you work with colleagues and people, and it's how you build companies with strength and resilience. And this correlation, the stronger the company, the more resilient it is, the more successful it's going to be. Not everyone realizes that yet, but I'd bet everything that this is going to be true. So you're actually at the center of maximizing financial returns as well.
So one of the things that I'm really taking away from as a very positive message from your answers is actually, if you really think long term, and if you think at the trends in terms of especially the new generation, the investors of tomorrow, the customers of tomorrow, the employees of tomorrow, will care about impact so much more perhaps than we've done in the past, that actually having a business that's good for society will just naturally become the right way of doing business.
Yes, it will, because take a little coffee shop that you're opening in Nice, and you're treating the people around the coffee shop well. How are you disposing of waste? How are you treating the community? How are you treating your suppliers? Where did you buy the coffee from? Have you checked how much people are paid in the original farms, maybe in Ethiopia? More people will come into that coffee shop, more capital will be attracted to it, and better people will want to be employed by it. So we're on a positive correlation movement. So we believe that even in the building of longer term private equity portfolios that we do across the world, we're now introducing impact funds, and the younger generation, the younger members of families that we help, are saying to their parents, "What is this? Where's the evidence? Where's the openness?" And that is also impact reporting. So I think you're in such a great place, Jasjit, for your MBA students next week. I wish I could come along.
You're welcome anytime. Mark, thank you very much. That was really inspirational, at the same time as really educational for all of us. We really appreciate you coming. If I could clap on behalf of all the people.
Okay. Well, thank you so much. It's lovely to be with you. Thanks, Jasjit, for everything.
Thank you. And so let me just wrap up in a minute or two. I wish we could have taken all the questions. Clearly, we don't have time for that there. So, but I just have one or two wrap-up slides, and then we'll call it a day for now. So my colleague Vinny Jiang and I have just written an INSEAD Knowledge article that will be released in a couple of days, which exactly is in the spirit of what Mark mentioned about what lies ahead for the class of 2020. And I would say that increasingly it's no longer a choice to say, hey, I'm going to go into an impact career. I think the careers, one of the messages that I took away from what Mark said was that the careers of the future would naturally be successful if they're also more sensitive to society than perhaps we have been in our generation so far. The other thing, of course, is that, yes, COVID seems like a very immediate threat, but this is a picture that somebody sent me from the internet that there's going to be a long rebuilding phase, and then we have bigger battles ahead, like climate change. And I think a lot of the issues that we are seeing as very immediate right now, I think that there's much bigger battles that lie ahead. And so this mindset shift is not just about COVID, but it's something for a much longer time frame. And the last thing I want to mention is, we run this very successful annual program called INSEAD Social Entrepreneurship Program, which says let's run business with impact as the first goal, and then talk about profits. But clearly, I think going forward, what we would like is for a program like INSEAD Social Entrepreneurship Program to become redundant, because we want this way of thinking actually to become much more mainstream than it has been in the past. So just finishing up with the next slide, we just want to say, please keep in touch, stay connected. This seminar was made possible by the Global Private Equity Initiative. There's some contact information to keep in touch. In particular, they're doing some research around ESG right now, on which they're looking for partnerships with GPs and LPs. If you'd like to get involved, please reach out. We'd love to get your input. And then there's some information more generally about the lifelong learning program that INSEAD has, and that's a series of which this seminar is a part. And thank you for making the time to attend, and we hope to see you soon again. Thank you, and have a lovely week.